Welcome to the first revision video for GCSE Business with OCR. Over the series of the next 6 videos, we're going to be looking at each of the themes, practicing some questions, giving you some tips on how to answer and structure your responses. Remember, theme 1 will appear in paper 1. It could also, however, appear in the last question of paper 2, which is a synoptic question bringing together different elements of the entire course. So let's start off with looking at the role of business, enterprise and entrepreneurship. Enterprise is a process where organisations identify opportunities and strategies to bring new and innovative products to the marketplace. When we talk about products, remember that includes services, so physical and non-tangible products, and methods to enhance the existing products, improve methods of production that are already in place. Enterprise's role is to generate income and achieve growth. Now, the reason for generating income we'll look at later when we look at motivation for starting businesses, but if we think about generating income, achieving growth, that's going to be for either the business or for the social reasons the business wants to invest, and it helps with the wider economy as well, creating jobs, contributing to a national income. Enterprise also is a driving factor behind competition. New products or bettering existing products mean that your particular company will have an edge over competitors. That will help you generate more revenue, more sales, and will encourage the competition to try and improve their products as well. Those things lead to better customer experience, better products for the customers. Entrepreneurship involves individuals who create these businesses. The entrepreneurs are the ones who have that idea, spot that opportunity, get the funding in place and take the risks on starting or running a business. An entrepreneurial mindset is characterized by being innovative, having the ambition, the drive, and a willingness to take risks. Many entrepreneurs fail. A feature of being a successful entrepreneur means you need to learn from the mistakes and never give up. Entrepreneurs play a crucial role in the economy of the UK and countries all across the world. As we've already said, they are the people that create new businesses. Those businesses create jobs. Those jobs create economic growth. Entrepreneurs can be disruptive in terms of making new products which challenge existing markets. Although Elon Musk didn't develop Tesla, the idea of electric vehicles, he took that company in a direction which became a force in the automotive industry and disrupted the traditional players. Entrepreneurs also can be a vehicle for social change. Entrepreneurs such as Anita Roddick, when she created the Body Shop, brought in ethical ideas to the high street which weren't there and changed the face of makeup and beauty products in the UK and across the world. Business and entrepreneurs face lots of challenges. They need to be able to secure finance, they need to be aware of market changes, they need to be aware of the risks that they face when they're starting and running the business, and if they don't understand them, they are unlikely to be successful. Now let's have a look at business planning. Business planning involves the creation of a document which details information about the company and can be useful for several different features. It can help the business stay on track. It can help the business gain finance. Within the business plan, there should be objectives that the business can monitor itself on, and these may well be short and long-term objectives for both the first 12 months and up to maybe 5 years or more. Within business planning, you need to ensure that you should have detailed market research, identifying who your target market is, how your organization is going to be structured, financial predictions, including cash flow and break-even analysis, and identifying challenges or obstacles. As I said earlier, a business plan is essential if you are trying to convince a bank or other investors to give you the funds to start your business. When you are starting to put your business plan together, quite often a SWOT analysis is useful to help identify different problems that your business might face, as well as the strengths and opportunities that you want to take hold of. Part of your SWOT analysis could include doing market research. Accurate market research with a wide enough demographic is going to be useful to help you develop your product, to identify the best pricing strategy to use, what promotional activity to engage in, and indeed where you could place your products for sale, whether that be online or on physical stores. You might have noticed there that when we're talking about business planning, we're already linking that into a different topic. Very often you will find that questions will need to bring in different sectors to build an answer. The only time you will really be focusing purely on one section of the theme is when you have got a multiple choice question, or a knowledge question, or a 2-mark knowledge and understanding question. Also within the business plan, financial planning, again, another sector, another separate sector. You need to be able to demonstrate that you've got an effective budget and you've taken account of areas where you might be short of money and need to raise additional funds. Business planning is not something which is done once and then put to one side. Successful business planning means you need to regularly review and adapt what you have written previously. The dynamic nature of business means that things never stay the same. We're now going to look at business ownership. The first two are sole proprietors and partnerships. These are generally smaller types of business, although not in all cases. A sole proprietor means one owner. It doesn't mean there is only one person in the business. It just means one owner. The sole proprietor can employ people to do other jobs. Generally, when we're focused on sole traders in your exams, it does talk about small businesses, quite often with just one person, no employees. But please think about the context, read the case study. If there is only one person, you have to make sure that you make all the decisions and you have all of the skills. If you are sick, there is no one to do the job. If you take holiday, there is no one to do the job. So those are certain negatives. But remember the positives. It is simple. You get to keep all the profits and you get to make all of the decisions. As a business grows, it may need to bring in extra finance. And one of the easier ways to do that is to create a partnership. Now, there are two types of partnerships, but I'll talk about the general one first. The biggest disadvantage of a general partnership is that you still retain unlimited liability. But it's unlimited liability with a twist. You are responsible for the actions of your partners. So if your partner runs up a huge debt on behalf of the business, you are liable for that alongside the partner. Means your assets are potentially at risk. On the other hand, you've got someone hopefully has a complementary set of skills and can help you move the business forward. If you've got someone there to help you run the business, you are able to take holiday. You can have time off sick without there being a major impact on the running of the business. There is a second type of business that you need to know, which is a limited partnership. Here, although the rules about how it operates on a day-to-day basis are basically the same, the liability is slightly different. You will have one partner who has unlimited liability and all of the risks of losing assets that maintains, but you will have a number of limited partners who only risk what they invested. We're now moving on to a different type of business. Those first two types, there's no legal separation between the owners and the business. When we start looking at corporations, we have something where the business has its own legal identity to the owners. And we no longer call the people who own the business owners. We now start referring to them as shareholders because they hold a share of the business and they get a share of the profits in the form of dividends. Corporations' main advantage is that they have a limited liability for their shareholders. That means the personal assets are not at risk. They are shielded from the company's debts. Those individuals will only lose the amount of money that they have invested. Now, the main two types of incorporated businesses are private limited companies and public limited companies. Private limited companies will have LTD next to their name. A common error that students write is that private limited companies are owned by friends and family. That is not necessarily the case. You do not have to be a friend. You do not have to be a member of the family. What happens is you need to be known by one of the shareholders, and the other shareholders have to agree to allow new people to join it. So please don't write friends and family. Remember, they have to be known to the shareholders, and the shareholders have to agree to allow people to become additional shareholders. Public limited companies, on the other hand, anyone can buy shares. The shares are traded openly on the stock exchange. That means you have no control if you are an original shareholder over who else is buying shares in that company. Positive of that, it means you can create additional shares, generate extra money for the company to use to help grow. Negative of that, if somebody is able to buy shares off of enough shareholders, they could end up taking control of the company that you originally owned. We need to think briefly about limited liability companies as well. Now, that's a hybrid type of company which is halfway between an incorporated business and a partnership. Owners here are called members, and they have personal limited liability like a corporation, but you have operational flexibility, which means there's more day-to-day say in how the business is run. The last type of business we need to look at is a franchise. Now, please remember, a franchise is where somebody operates a brand on behalf of the original owner, the original company. Most McDonald's in the UK are not owned by McDonald's Corporation. They are owned by franchises. Franchises can be anything from sole traders, partnerships, limited companies to PLCs. And the advantages and disadvantages of those types of ownership remain as they are. When we are talking about a franchise, though, you need to focus on the benefits and risk to the franchisor, the person who owns the brand. Franchising enables those businesses to expand very rapidly because they are not really risking their own money when a franchisee opens a new store in a new town. What they are risking, though, is potential danger to their reputation if that franchisee does not operate the business at the same standards that the franchisor would expect them to. Right, let's just think about what is the right type of ownership. As I said earlier, there is no right or wrong. You need to consider various factors. What is most appropriate for the size, scale of the business, what they want to achieve, how driven they are to expand rapidly. So when you get a case study, look at the situation that's presented to you. Is the business a small business already? Is it a limited company? What are the advantages and disadvantages of each of those types of business? And pay attention to what the question is asking you. Are they talking about different stakeholders? Are they talking about the impact on the owners? Are they talking about the growth of the business as a whole? Are they talking about impact on other stakeholder groups like employees or customers? Now, at the end of the last slide, I just started talking about what are the objectives, what are the aims of the business. So it's quite useful now that we just consider those briefly. Aims are long-term goals that the business wants to achieve, whereas objectives should be SMART. Now, SMART is an acronym that stands for specific, measurable, achievable, realistic, and timely. There are lots of different acronyms that you will see in different books or videos. I actually prefer specific, measurable, achievable, relevant, and timely. To me, achievable and realistic are the same thing. The key thing for you to remember is that they need to be something that you can measure. It can't be vague and therefore must have a time limit. For example, we want to increase our market share to 20% within the next 12 months. You can measure that 20%. It's got a time limit. Now, whether or not that is realistic or relevant would depend upon other factors. Objectives are useful to help the business move forward. If you've got something that you can measure, you can see how close you are to being successful. Objectives, though, shouldn't just be set in stone and parked to one side to remain the same forever. We've already mentioned that the business environment is dynamic and fast moving. That means your objectives will have to change. Lots of businesses in 2019 might have had an objective of building profit or gaining market share. Then all of a sudden in 2020 we had a global pandemic and shutdown of the economy. Business objectives then might have had to downscale to something like surviving. Now, different stakeholders will have an impact on a business's objectives, and it depends who has the most power as to what those objectives will be. And some objectives could cause conflict. For example, if the business set an objective of raising profits by keeping costs down, costs could impact on the business's pay to employees, which could bring those two different stakeholder groups into conflict. Objectives can be very wide-ranging, but they tend to break down into general areas. One area is going to be focused on profitability. Profitability for commercially driven companies is a reason behind running the business. People want to make a profit. They want to be successful. But it's not always the case, because profits can be used to help develop new products, new services, and new ideas, achieving growth for the business. So it's not just about taking the money and running. Growth objectives are about increasing market share, moving into different markets. There is a link there between profitability and growth, which often come hand in hand. Your profit might be lower while you are striving for growth. When you achieve that higher level of growth by moving into different markets, your profits could then increase. You could have objectives focused on improving your customers' views of you. Happy customers are loyal customers. They will come back. They will tell people that your business is good and encourage them to buy your products. You know that human beings tend to focus a little bit on the negative, and they are more likely to tell their friends and family about bad experiences than good ones. So even if you're not managing to improve your customer satisfaction levels, you could stop people moaning about you, which is going to be a good thing in terms of allowing you to be successful and increasing profit. Your business might have social or environmental objectives. That could be through a belief that the owners have, or it could be linked into helping to attract customers because their potential customers have environmental and social beliefs. Just to reiterate, it is really important that businesses review their objectives regularly so they know how they are going in achieving them, and they can be adjusted if necessary. Let's move on to 1.5 and think about stakeholders. Now, we've already identified many stakeholders as we've been talking through the slides before this one. So stakeholders are individuals or groups who have an interest in or are affected by the activities of a business. That is a key definition. Stakeholders are either internal, or they are external, or they are connected. You've got some examples of those different types within bullet point number 2. All stakeholders will have an influence on the business, but how much of an influence will depend upon the power. For example, if we are talking about Tesco's, Tesco's have over 25% market share of supermarket sales in the UK. If they are negotiating with a supplier, Tesco's have a lot of power over that supplier. The supplier can't really afford to turn around and say, I'm going to throw away 25% of the market. However, if that same supplier is negotiating with a small corner shop, the situation is reversed. That supplier may well have more power than that single corner shop in negotiating a good deal. Conflict of interests we've already talked about on the previous slide. Managers might have a conflict of interest with employees. Managers might want to invest profits into coming up with new product ideas. Employees may want to have a bigger pay rise, which will increase the business's costs and mean they will have less profits to invest. A business might want to grow, might want to expand, might want to build a new factory. However, the people living close to that site, the local community, might object to the noise, the pollution, the congestion that will come from that new factory. So there could be conflict there. Businesses have got a difficult job in trying to manage and balance the different interests of different stakeholder groups. Some cases, they might be successful at trying to bring stakeholders together to reach a conclusion that is satisfactory. In other cases, the business might feel it can ignore the needs of certain stakeholders. Building upon that idea of power and ignoring certain stakeholders, there are some stakeholders that a business cannot ignore. For example, the government. If the government passes a law, then that business has to comply. If there's a local protest group, the business might try and just ignore it and hope it will go away. One way to try and avoid conflict between stakeholders is through effective communication. Even if stakeholders are disagreeing on certain key points, having regular meetings could allow stakeholders to come together and reach some form of consensus. Businesses that effectively communicate can often be the ones that are most successful and ensure that they are able to be sustainable in the long term and achieve their business growth objectives. As I said on the last slide, we just talked about business growth objectives. 1.6 is about business growth. There are two types of growth that you need to remember. One of them is organic growth, which is also known as internal growth. That comes from introducing new products, opening new branches, increasing the amount of sales. And you've got external growth, which is where businesses come together. Now that could be from a merger, or it could be when one business buys out another business, a takeover. When you have mergers and takeovers, they can be horizontal. So horizontal would be in the same industry. So for example, two supermarkets merging together. Morrisons and Safeway merged together. The name Safeway disappeared, but Morrisons became a bigger company as a result of that. Or it could be vertical between different stages of production. For example, Tesco's buying a farm to ensure that it has guaranteed supplies of vegetables or meat. The final type of merger or takeover is called conglomerate, and that's where you can have firms in different industries coming together to maybe alleviate some risk. Not all businesses will focus on growth, but there are some advantages of growth. And the big one to remember is something called economies of scale. Now, economies of scale is where the cost of output falls because you can operate at a higher level. You see this in the supermarkets when you look at products on the shelf, and the cost per unit tends to be smaller in the bigger versions of the different products. So if you look at two cereals next to each other and the price per gram, the bigger box price per gram will tend to be lower than the smaller box price per gram. Although economies of scale can be useful as a business grows, there will come a point where any additional growth will not yield any further benefits. At that point, for every increased level of output, the costs start to rise. That is known as a diseconomy. Other factors that are negative in terms of growth could be loss of control, more businesses coming together, more shareholders, more potential for conflict between the cultures of different businesses, risks for being exposed to different industrial areas. When deciding to grow, there is a tool that businesses can use called Ansof's Matrix. Ansof's Matrix splits the types of growth into 4 areas. Market penetration, that's when you are focusing on selling more products in your existing markets. So the focus really is trying to develop market share. Market development is looking for new markets for your existing products. Less risk because you're not doing research and development. You know the product, you just need to find more customers, potentially in different countries for that. Product development, as it indicates, is creating new products, but that will be within your existing markets. So you should understand your customers and you should know the type of thing that they would be interested in buying. And then finally, diversification, which is potentially the greatest risk, but also the biggest reward, because you are coming up with new product ideas to work in new market areas, things that you won't necessarily have experience or skills in. We're now going to look at some questions and starting off with multiple choice. In both paper 1 and paper 2 there will be multiple choice questions. In exam feedback from OCR, they have stated a number of candidates do not answer all of the multiple choice questions. You are not going to be negatively marked if you get a question wrong. So even if you are not sure of the answer, it's worth putting something down. If you change your mind, please make sure you indicate clearly what your new answer is. If you've been vague and put crosses in 2 boxes, then you're likely not to get a mark. So cross out the wrong answer completely and make sure people understand what the mark is. It would be a good idea to pause the video while you answer these questions so you can check your level of understanding. So the answer to that question is D, being uncomfortable with taking risks. Being an entrepreneur involves taking risks. It involves looking for opportunities and being confident and having the resilience to work through problems. So if you are uncomfortable with taking a risk, you are unlikely to have the characteristics of an entrepreneur. Which of the following is a benefit to an entrepreneur of having limited liability? A, all profits are tax-free. B, owned possessions are not at risk. C, productivity will fall. D, suppliers are more willing to supply. So one of the benefits of being an entrepreneur with limited liability is that your possessions are not at risk. The objectives of a business are A, negative comments from the local community. B, the buildings and equipment the business owns. C, the items the business makes and sells. D, what the business intends to achieve. So the objectives of a business are what the business intends to achieve. A photography business is owned by 3 sisters. The sisters have unlimited liability. Which of the following types of business does the sisters own? A partnership, a private limited company, a public limited company, or a sole trader? Well, the answer has to be B, a private limited company, because the question says it's owned by 3 sisters. Now, I said before, doesn't have to be friends or family, but this gives an indication that it is either going to be a partnership or a private limited company, because if it was more than just 3 people, then it could be a public limited company. If it was only 1 person, it would be a sole trader. Then we also know it's got unlimited liability, so that narrows it down to either B or C. Putting those 2 things together, it is likely to be B. Raddy owns Chimney Restore Limited, a company he set up in 2018. The company has grown rapidly and now employs 12 workers. However, Raddy is becoming increasingly concerned about the level of risk he faces as the owner of a rapidly growing business. Which of the following would help Raddy reduce his level of risk? A. Becoming a sole trader. B. Carefully planning all the business activity. C. Ignoring the needs of his customers. D. Making employees work long hours. So the answer is B. By carefully planning business activity, that can help reduce the level of risk. Planning, though, won't completely remove it, but planning to deal with unforeseen circumstances in his business plan, what would you do in certain situations, sorting out money if cash flow is predicting that there's going to be a negative cash flow at some point, that will all help reduce risk. Becoming a sole trader would increase his level of risk because he's currently a limited company. If he went to a sole trader, he would have unlimited liability. Ignoring the needs of customers is never a good plan. They won't stay with you. And making employees work long hours is going potentially not to help you. It could increase productivity in the short term, but in the long term, you're going to have disgruntled employees who maybe not be as motivated, might start turning up late or being ill, might not be putting as much care into the products that they're making, and that could increase the number of customer complaints, customer returns, and increase the level of risk. We're now moving to section B. Section B is going to be case study based. The vast majority of the case studies in both paper 1 and paper 2 are going to be real. They will be based on real companies and they will have real data that is being used for you to look at, analyze and interpret. There will be a range of questions up to 9 marks long that will be based on the case study. If the question has the name of the company or a stakeholder, for example, employees, customers, in the question, then you must answer using some context. If it is just a general question without a company name or a stakeholder, then it is really asking you knowledge questions and you don't have to use the case study in your answer. If you are confused or worried that you're answering wrong, it's just easy to put in a case study related question. Please remember, if you are doing a link to the case study, you need to think about the Tesco's test. If your answer reads the same just by inserting Tesco's as opposed to the company you're talking about, then that's not in context. Just writing the company name does not give you application marks. You need to use the case study. Embed your answer in the industry. Think about what the company is doing. That will give you application marks. For some questions, if you don't get application, you can't get anything extra. Right, so the Ford Motor Company Limited is a global manufacturer of a range of vehicles, including cars, vans, trucks and buses. Ford Motors has been one of Britain's best-selling car brands for over 30 years, with a range of models including the Car, Fiesta, Focus, Mondeo and Galaxy. The company's large range of products includes models that differ in size to meet the individual needs of different market segments, including eco-friendly small cars, family cars, sports cars and 7-seater people carriers. Ford Motors carries out a lot of market research when developing new car designs and uses both primary and secondary research. This ensures that a new car designs and models meet the needs of potential customers. Each model's sale levels are regularly monitored against the product life cycle. Okay, so the first question, explain one way that preparing a business plan may be useful to Ford Motors. This is an example of what I was talking about. Does the question use the case study business, or does it use a stakeholder within the case study business area? This one is asking you to be specific about Ford Motors. There are two marks available. One is an AO1 mark, one is an AO2 mark. Now, AO1 is split between AO1A, which is knowledge, so for example, a definition, and AO1B, which is understanding. And when we're talking about understanding, it's not asking for a definition, it's asking how is a business plan used? And in this case, you need to be thinking about how does Ford use a business plan? And that will give you the AO2 application marks. This is not a long question to answer. You just literally need to do 1 or 2 sentences. So stop the video and have a go at answering that. Okay, so let's have a look at some possible things you could have talked about. So a business plan can help secure money from different investors. It can help you focus on your aims and objectives. It can help you identify new market areas for your target market. It can help you identify what you need to have to make the cars. It can help you reduce the level of risk. It could help you schedule how you're going to produce the car. In terms of finance, it could help you forecast what your sales would be, what your revenues would be, and set budgets as a result of that. Once you have set your budgets, you can monitor your progress against those budgets and your sales targets. And overall, it can help you put all of your ideas into place and get it working. We're now going to have a look at how you could answer that question. So on your screen now, you can see a couple of suggested answers. So preparing a business plan should help Ford Motors to secure finance. So that's the AO1B, the understanding. A business plan can be used to secure finance for the manufacture of its new car designs. And that bit about cars is application. It's identified the fact that Ford make cars. It's as simple as that to get the application mark. Now, if we look at the second option, risk will be reduced. Again, that shows how the business plan can be used, but there's no application there. It is just a knowledge. Risk will be reduced as a result of careful thought that will have been put in. That could apply to any business. And that is a common mistake. Students think that because the question is saying explain one way that preparing a business plan can be used by the company, they don't have to actually address the details of the company. Right, let's have a look at another case study. This is Beautiful Buds. Beautiful Buds PLC is a company which grows plants that are sold to garden centres throughout the UK. Beautiful Buds has a new managing director who has proposed a merger with Green Gardens, a chain of garden centres selling a wide range of plants to other garden products. Green Gardens is currently one of the country's largest plant and garden retailers with a market share of approximately 12%. The vertical merger will result in one company owning a chain of garden centres as well as growing the plants which are sold in these retail outlets. Beautiful Buds currently has 124 employees. Its managing director is looking to make the business more efficient and is planning to change its organisational structure by removing 2 layers of management. This change is being planned before the proposed merger. The managing director believes that the tasks carried out by the middle managers and team leaders can be effectively completed by employees either below or above them in the structure. The estimated redundancy costs are £200,000. Now, there's a lot of information there, and obviously we're just focusing on theme 1. So there's going to be bits which will be covered in marketing, etc. and organisation design in the people section. But each case study will be designed to bring in knowledge from different elements of that. So the question here is analyse 2 benefits for beautiful buds of growing externally. This is 6 marks. Now, if it's giving you a hint that it wants 2 benefits, basically that's telling you there are 3 marks for each of those benefits you identify. Now, AO1B again is asking for understanding. You can assume that if analyze is in the question, it's always understanding as opposed to knowledge that they are looking for. So what is external growth in context of beautiful buds? Application, again, using the case study context. And AO3 is split into 2 parts as well. You've got AO3A, analysis, and AO3B, evaluation. Now, analysis means you need to show the benefit, the impact to the company. It says benefit here specifically because the question is saying 2 benefits. You will often then get a question that follows up on this saying drawbacks, but please make sure you are focused on what the question is asking you. Now the second AO3, AO3B, is evaluation, and evaluation can be different depending upon the different type of question that is asked, but we'll cover that on a different style of question. So understanding for this question, you could talk about merger, you could talk about merging, takeover, taking over, buyouts, joining with another business, a joint venture, becoming part of another business, vertical integration, horizontal integration, well, that potentially would be wrong out of context, buying a business. So anything that shows you can understand that growing externally means that 2 businesses are coming together, that would give you the AO1B marks. Now, what are the benefits? It's a quicker way to grow. It can help the business expand. It can help the business increase product ranges. It can remove competition from the market in some cases. You could benefit from the reputation of the other business. You will be able to acquire new skills. In this case, you're securing raw materials or an outlet for your products by 2 businesses coming together. Bigger company might get a better reputation, might become more popular as a result of that. So let's have a look at some suggested examples of answers from the exam board. Merging is an AO1B, will allow Beautiful Buds to increase its sales revenue. That's the impact on the company from selling plants. That's putting it in context. External growth allows a business to gain an enhanced reputation. That's the application, the impact on the business. From the business it takes over. It's the AO1B understanding. This will improve the business's image, AO3A. Now, I don't like that particular answer because to me, the AO2 and the AO3 are very similar, but that was a suggested answer from the exam board's mark scheme. Beautiful Buds PLC will benefit from acquiring other businesses. AO1B, that's the acquiring other businesses bit. Its assets and skills give you the AO3 bit analysis. That's how it's going to benefit. Now here we've got a 1 mark question that shows you exactly what I was talking about and how a question could be generic or it could be applied. Now it says identify 1 way that Beautiful Buds PLC could have grown organically. This means It's an AO2 answer because you have to apply it to beautiful buds. If the question had said, identify one way that a business could grow organically, then that is an AO1A knowledge mark, and you could talk about anything. Because it mentions beautiful buds, you need to apply your answer to how beautiful buds could grow organically. Now, an identify question doesn't require a lot of writing, but it is going to require a sentence. There are lots of different ways that beautiful buds could have grown organically, and you've got a whole list of them there. Remember, this is not about merging with another company. This is how they can grow by themselves. So you've got uh, increasing the range of different plants, coming up with new types of plants, extending the range of plants, maybe moving into a new market, moving into selling, making garden tools, moving into a different method of selling instead of through other shops, maybe selling directly from online. So there are lots of different ways that beautiful buds could do it. All of those answers on the screen are focused on the context. It talks about plants, it talks about garden centres, it talks about garden tools. You need to make sure your answer is fixed on the case study. So the question here is analyse the impact on two stakeholder groups. It's asked you to do two. It's a six-mark question, so that means you're going to get two lots of three in terms of how it's marked. It's an analyse question. That means it's AO1B understanding. So you need to be able to show you know what a stakeholder group is by naming one. It's not giving a definition. Your AO2 application means it needs to be embedded in the context of the situation, and your AO3A analysis part is what is going to be the impact of that vertical merger on the stakeholder, not the company. So let's have a look at some of the stakeholder groups that could be impacted by this vertical merger. So employees, obviously there's the potential for job losses, but there's also the possibility for new opportunities. They previously worked for a small company. They've now got an expanded company in a different area in the chain, from production of the plants through to selling them to consumers. There might be opportunities there. In terms of competitors, Beautiful Buds and Green Gardens are now one company. That means Beautiful Buds may not be able to sell products to competitors anymore. Those competitors won't have the option to sell Beautiful Buds products. They might go out of business. All Beautiful Buds products might now go to Green Gardens. Customers might see a wider product range. They might see lower prices because the businesses are now one. There's one set of profits they could focus on at the end, as opposed to each of the two companies trying to make a profit out of their business activities. And then shareholders, it's a PLC, remember. They are going to be impacted because there were two separate companies. There is now one. The price of shares might go up, it might go down. The profits might change. There might be an initial cost involved in the creation of one new larger company, which could have an impact on the dividend that they're paid. In the longer term, the not having two separate companies may lead to some cost savings, which could increase profits and therefore the dividends that shareholders are receiving. Okay, let's have a look at some answers. Customers, AO1B, that's showing your understanding that a customer is a stakeholder. Will be impacted as prices may be cheaper, so that's the actual analysis bit. The prices are going to be cheaper for the customers. So the customers will be able to buy more plants. You've linked that to the fact that we're in the garden centre industry and the context mark comes from that. Employees, AO1B, you've identified that employees are a stakeholder, will be impacted as the merger may lead to greater opportunities. That's your AO3 analysis, as the company is already one of the largest in the industry and will become even larger. Now that's a little bit weaker application. It could be strengthened by linking back to some information in the case study. For example, it talks about how Green Gardens has got 12% market share. But that was from the exam board as the minimum expectation to be able to get an AO2 mark for that. Right, let's move on. Right, finally, we have a recommend question for 3 marks. Recommend which stakeholder group will be most affected by the vertical merger between Beautiful Buds and Green Gardens. Give a reason for your answer. Okay, right, we've already said that you have AO3A, which is analyze, and AO3B, which is an evaluate style answer. In this case, it's recommend. And there are 3 marks available, 1 mark for a recommendation, 1 mark for justifying your recommendation, and 1 mark for justifying your recommendation in context. Now that might seem a little bit weird. Hopefully it will become clear when we look at the answers. But in this case, 1 mark for recommendation. So that is just identifying a stakeholder that will be affected. Your 2nd mark comes from saying why it will be affected more than the other stakeholders. And the 3rd mark just comes from ensuring it is embedded in context. Have a go at that and then check the answers. So let's have a look at the suggested answers. So for the 1st mark, the recommendation mark, we've got customers would be the most affected. Okay, because there we go, we've got the analysis starting. They would be able to buy Beautiful Buds parts at more locations. So we've got the plants bit which gives you the context, and the more location element that gives you the justification. 2nd suggested answer, employees are likely to be stakeholder group most effective. That's your 1st mark, just by identifying the group. By the change, because it may lead to some of them losing their job. That's the reason why. There's no context there. There's no mention of the company, and there's no mention of the situation that will happen from some form of joining together of the 2 companies. If the candidate had put in something along the lines of both Beautiful Buds and Green Gardens will have a marketing department or a finance department, they will only need 1 in the new business. That means that some employees will lose their jobs. That would have given full marks for that. Okay, so that was a quick run through theme 1. The next video that follows on from this is theme 2 on marketing. It will give a brief run through of the knowledge that is required for this topic, and then it will take you through some examples of different types of questions. We've only really looked at a small range of questions here. If you want to see some examples of the entire range of questions, you will need to look through all of the different videos. Thank you very much for your attention. Have a great day.